All right, good morning, everybody. So we're done with FOMC. Now we focus on OpEx and any data plots, especially any that the Fed had mentioned. So unemployment, things like that. We've also got rates that are going to be likely going up in Europe. So there's still a whole lot on the table. The jobless claims are going to be a big deal, but we got this European press conference, get through that, and then a lot of different ECB speakers, European Central Bank and Bank of England. So nonstop data, just coming at us all day. If we look over at FX Street, kind of gauge which of these are likely to be impactful. So we know the presser is going to be a big one, the ECB press conference. So yeah, 8:15, 8:30, 9:15, 10, 10:30, 11, 11:30. It, like I said, it's nonstop all day today. Now, for the most part, something's going to dominate, right? Something's going to take control of the narrative, and that's going to be the thing that we focus on above anything else. We just don't know what that thing is going to be yet. So that's what you're going to be wanting to keep your eye on with finance juice, you know, that, and as much as I hate to say it, I'm gonna say it, but keep your eye on Twitter, right? If you I've had people ask me, you know, where do I get some of the things that I post so fast? I get it from Twitter. I hate Twitter. I hate it. So, you know, me suggesting that you watch Twitter, I don't take that lightly. Watch Twitter. If something is happening, it will be known there faster than anywhere else. Most of the news agencies that do report, quote, breaking news, get it first on Twitter. Then they start verifying their sources, usually before they start publishing something. You can also see the thread or the narrative of what is dominating the scene today just by seeing what everybody's talking about. So that helps, right? If Christine Lagarde or somebody pops off today and steals the narrative and dominates the scene, that'll be the headline, the one that sticks. Thinkorswim does have a built-in, I say it's pretty powerful. It's called Trade Flash. Unfortunately, if you're on paper, you can't see it. You don't even have access to it, I believe. But Trade Flash is run by a company called Hammerstone, which is one of the most expensive products I've ever come across. And yet you can access it here for free. Right? It's not the full version. Obviously, you're getting a limited version, but it is absolutely amazing. So keep your eye on that. If anything comes out that they deem relevant to the market or they believe will move the market, it usually gets posted in there. So far, all of the breadth and all of the bigger picture charts show that this is nothing more than a pullback, a bit of a pause, a little bit of just chewing up these gains that we've had, right? If you look at the ES on a weekly chart, we kind of got out there a little ways. So it would make sense that we pause here a little bit. And I'm taking the time to mention this because I'm trying to encourage people from going out there and loading the boat with a bunch of shorts as if we're gonna cut this run in half and end up back at 3,800. I don't want to say we can't go to 3,800, but that's unrealistic, you know. Huh. Well, I'm not doing anything different today than I do on any other day. Anybody else having an issue with the full screen not working? Because if nobody else is having that issue, then I would say it's your issue, right? That you're not doing something right. There you go. So it must be on your end. Thanks, guys, for the feedback. So we could have the short-term shorts. We could, sell some calls and expect maybe that the market doesn't continue to rally for a little bit. But by no means would I try shorting this thing as if we're going to cut this move in half. The overnight volume is sitting at around 100. It's a good number to be at. It shows participation, that they weren't sitting out for anything in particular. We did get a relatively decent expansion too. We made it all the way down to the first ADR line. This implies that they've already got their work done. Now, this is a little bit of an odd way to approach it. It's not necessarily something I subscribe to, but it's something I've come across before, and I kind of like the analogy or the narrative behind it. So suppose Sally gets the call from her boss. Boss says, "Hey, I need you to move X amount of contracts today." If the Globex range is really narrow, she hasn't done it yet, right? She hasn't gone in and moved X amount of contracts. So she still has work that needs to be done. She still has unfinished business. She will at some point begin to move those contracts, which will move the market. But if the Globex is already widened out, if we've already got moves that have happened in here, then it kind of implies that maybe she already got her work done. She doesn't have anything else to do. She doesn't have any reason to move the market. That wouldn't apply to all scenarios, right? Doesn't always fit. And it might be a little simplistic, but it's an analogy to kind of keep in your mind sometimes, right? When it comes to these very narrow ranges in the Globex, where it just seems like nothing traded, it implies that there's work to be done, right? That they haven't done anything yet, and that we have basically the potential to make big moves because we haven't yet made any moves. Whereas if you get a day like today, we've already made some moves. That really is all that it owes us. So we do have yesterday's low at 43.83. And we have the previous week's high at 43.25. We're kind of a long ways off from that, but we're going to get into how far away we are when we start looking at that 10-period moving average. 10-day, 30-minute volume profile. I mentioned yesterday that we had this big old air pocket. And that what we should expect is, since we moved through it to the upside really easy, we should also be able to move through it to the downside really easy, but we keep hitting something, or a correlated market keeps hitting something. Either one, doesn't matter. There's no pivot there for us to have hit. So we didn't hit something, a correlated market did. And it happened again yesterday. Maybe just playing save a hoe, right? So what that ended up doing is building some volume down there. We're starting to build a little bit of a shelf. It's interesting to think about the small amount of time that we spent there, and yet the exaggerated amount of volume that was down there. They defended that low with conviction and size. We can see here in blue how long we stayed at a particular price point. This is TPO in blue and volume profile in green. So we didn't spend, an ungodly amount of time there, and yet we absolutely built up a lot of volume there. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. The point of control will act as a magnet if we get too close to it, but we have to get through this low here, the midpoint of this air pocket where we keep seeing defense. We don't have a VPOC from yesterday to carry forward. Really nothing all that great here. It's interesting to note already this morning how much volume was sitting at these lows. Coming in early on the defense. All right, we are nearly back inside the box. So on Tuesday, we left the box. On Wednesday, we revisited it, but again left the box, or we stayed outside. Today, we are back inside it for the moment. It's basically right at that 4,400 level, right? So since it's not a support and resistance level, it really isn't something that you necessarily have to mark out like some line in the sand. More of just a zone or an area where you would anticipate of where are we, right? And are we above it or below it? Considering how strongly the defense was, it wouldn't surprise me if we end up back outside of the box again without really getting above this 44.40, right? We've kind of set the high, and other than maybe wicking out a little bit higher, like the megaphone that the strat talks about, right, where price sets that high, and then the next time it goes just a little bit higher and a little bit lower, each time expanding just a little bit more, right, kind of widening things out. So we could wick up, press that high, make it just a new wick high, but we close inside this box 80% of the time, statistically. At the end of the week, we're in that box about 80% of the time. So even if we do get outside of the box again today or into tomorrow, we still kind of got to have that expectation that more often than not, we end the week inside that. Another thing that helps when you're doing that kind of logic is ask, when was the last time we closed outside of that box? It wasn't last week. Arguably, it could have been the last week in May, because we closed like right on the line. Was it in the lines or out of the lines? It depends on if you drew the line by hand or used this indicator. if we wanted one with no doubt, no ambiguity, no confusion, no hesitation, I would say the second week in May. We absolutely closed outside the box on the second week of May. So it's been a while, been a hot minute. And what this implies when it comes to a streak, right? How many weeks in a row can we go closing inside the box before we're nearly naturally due for a week where we close outside the box? I'm naturally curious. I just had this idea that it's worth pricing 3,800. No, excuse me, 4,300. All right, so when you're building a spread on the SPX, 5 cents is as low as you can go. Right? It's a nickel market, so you can't get penny wide. You're not going to build things like a butterfly for a penny. If your broker is showing you a penny and then you wonder why you never get filled, it's because you can't fill for a penny. You have to fill for nickel sizes. So the cheapest butterfly we could build here is a 5-cent butterfly, which means we'd want to start widening it out, since if that's its cheapest size, then like what else you got? Oops. I'm just screwing this thing all up. Try that. So if we widen it out to $10 wide, it's 30 cents. I'd say work the order because you got all day, and why not, right? This thing is tomorrow's expiration, so there's no rush. I would say widen it out as wide as you can get it. This one's $15 wide, or 15 points wide, $70. I think you could fill that a lot cheaper, at least say 30, maybe 25. And the market's not open, right? So these aren't necessarily exact values. There has been times where I've built something like this and I set a price at 5 cents and I threw it out there and never checked on it again. And then, randomly throughout the day, I hear something get filled. It's always an odd sound when you forget that you have a trade out there and suddenly you hear that. But then you go and look and find, hey, I got filled for 5 cents. So I'm probably going to put that one on to butterfly at 4,300. And it's not because I think we're going to go down enough to get there. It's just, it's a YOLO, right? If I can fill that thing for 5 cents, I'm gonna try it. I wouldn't try it for a large dollar value, right? It's not worth it. Trying to win a lottery with $1 at a gas station, who cares, right? It's $1, right? You get the scratching ticket and you scratch it, you win or you don't. Most likely you don't, and you don't care because it was $1. You wouldn't buy that same lottery ticket for $700 because it's just not worth it. It's the same thing with this one. So 42, 47, 42.50 basically is what I should have been targeting, not the ES's 4,300. So let's go back in there. 42.50. Then we'd want, say, do it like that. We're so far out of the money that it's reading it as a credit. Just ignore that because it doesn't know any better. 10 wide is flat. That would never fill. 15 wide is 5 cents. Yeah, there we go. Now we can really start widening this thing out, right? 20 points. Oops, wrong way. 15 cents. So right now, I'm 20 points wide in this thing. And we're looking at 15 cents, and I'm skewed somewhere. Need to go to 80 on this one. There we go. 50 cents, and I think we could work the order and get something better cost-wise. But look at the range of that thing from 42.20 to 42.80. That's a pretty wide range. And to visualize where that is, we can send it out to the charts. There's so much stuff on here. Let's just kind of get that stuff out of the way. All right. We would need price to land somewhere inside of those two yellow lines between 42.80 and 42.20. That's a 60-point range. And if it lands somewhere inside of there, we have the potential to make some money up to, with a net profit, max profit of around $2,800. Like I've mentioned before, you'll never get the max profit. So take that number and cut it in half at least, or cut it into 4 parts and just look at a quarter of it, right? What's 25% of that max? And that's a realistic target. But even if you're only going to get 25% of nearly $3,000, you're still getting 25% of $3,000, especially if you can fill this for about 5 cents, right? Because you just put the order on at 5 cents, and if it doesn't get filled, you don't care. Don't spend some serious money on this trade, because we have no reason to anticipate that we're going to go to the bottom of that box, other than we haven't been to the bottom of the box in nearly a month, right? We got down there on May 24. It's been a minute. I hate the idea of saying we're due, but you kind of do. And if you're wrong, you're going to lose your 5 cents, right? Plus your commission. So you're basically going to lose $10 after commissions and fees and everything if it doesn't work. I played this strategy in 2019 before COVID for the entire year. The high side and the low side, and occasionally I did the middle. The strategy won more than it should have, than the numbers say, but I was still losing 70 to 80% of the time. And it's fine because the losses are very, very small and the wins are amazing. So the wins more than cover the losses. Otherwise, who the heck would ever do the strategy? But it's demoralizing to lose over and over and over and over and over and over, right? 10, 12, 15 times in a row. Just lose another one, lose another one, lose another one. So you got to be a special kind of person to butterflies are great for a small account, because the risks are so small, right? And all you got to do is skew the odds to where the machine thinks you have a 5% chance of winning when you actually have a 35 to 40% chance of winning. That way it prices really well. And when you're wrong and you lose, you're not wiping out your little account. All right, Bitcoin is down this morning 3.5%, or at least BITO. Which means the Bitcoin proxies should be down, right? Mara, Riot, Coin. It's interesting that in my TrendSpider list, I have this watch list of Bitcoin things. And we got the Bitcoin things from the Smalls Exchange ETF. They had this Smalls crypto futures, kind of a futures product. They don't have it anymore, but it was basically an ETF. So we opened the ETF up and took a look at what was inside it and got all the names out of it. This is that list of names. And interestingly enough, things like NVIDIA and AMD are on that list. So we got BITO, Mara Coin, Riot, MSTR. That's the one that I always forget. I knew there was one that I wasn't remembering. So Square, PayPal, TSM, NVIDIA, AMD, all of those get put into the same box when we talk crypto. So it's certainly something to keep in mind, right? It's easy to overlook the fact that semis are in that, or are directly attached to what's going on with Bitcoin. Also with Bitcoin, it's currently correlated with the NASDAQ at like around 70%. So we also look at Bitcoin as a gauge for risky behavior, right? Or for risk. So it's a liquidity tell, it's a tell on risk. It's heavily correlated with the NASDAQ. It's a whole lot of reasons to keep your eye on Bitcoin. Semiconductors are down around 1% with gold. Consumer discretionary, quote, AKA Tesla, also down. And then jets, tech, biotech. I guess it'd have been easier just to say, what's up? What's that? Nat gas is up. The KWEB constituents are up, right? So KWEB would also represent JD. Come on, Thinkorswim, you can do it. Yep, JD's up. Baba, Baidu, PDD. Maybe Neo. Nope. Liato. Yeah. Ride. No, not liquid. So yeah, the usual suspects, right? JD, PDD, Baba, Baidu. They're doing well this morning. So this leaves us primed for a a situation where everybody starts to get on board, right? Right now we're divergent. We've got some of the market to the downside, some of the market to the upside. We need everybody to do the same thing, right? To get on board and all row in the same direction. That's a lot, huh? So we need, at the top, we got risk on. In the middle, we've got our midline sectors. And then in the second row from the bottom, we've got what they call risk off. It looks like staples are up a little bit this morning. And utilities are up just a little bit. Defensive plays, right? Things that haven't been doing all that hot this year, starting to turn and kind of come off of those lows. Notice they're underneath that linear regression line, which is that white dotted line. Whereas all of these across the top here, the line is angled to the upside and price is above the line. So we're going to try to look for this capital rotation, which, I mean, it's not, right? We just don't have a better word for it. We're going to look for this rotation today and see if we get both sides. The rising tide lifts all boats scenario, or if it's going to stay picky and divergent and we only see some of the market going up while we see the other half going down. A good way to focus on this, and I'm curious on how they look this morning, is banks versus technology. All right, so here we've got Tesla, Apple, Amazon, Microsoft, Meta, Snow, and AMD. It's not all of them, but it's enough of them, right? What am I missing? Like NVIDIA. I don't even think that NVIDIA is in the list. That'll work. It's basically the FANG name so that we can look at them in the pre-market and we can see that they're down, right, from the New York FANGs. So we're not going to be getting those yet. The thing is, being gapped down just a little bit doesn't make me bearish. It makes me bullish. So we come out and maybe approach it from this logic way out here. All right, so yesterday, big day, nice expansion. We're going to be opening this morning down here somewhere, right? Unless we get a rally up in the pre-market, that's very likely where we're going to open. For a test on that bounce again, right? Maybe the gap is closed. So we have no reason to go all the way back down there. We closed that gap yesterday. So opening up, gapped down, allows us to find support, give us something to bounce on, and make that move to the upside. I would much rather open gapped down for a bullish move than open gapped up. Either way, we've got our high, so we really don't have any expectation of getting through that high. And if you look at spot gamma and everything else, they are basically pointing to the same thing, right? That we really shouldn't get through there. Not this week. So if you're looking for some day trades, the China constituents, those ADRs, the JD, BABA, Baidu, PDD, or the Bitcoin names, you can go in that direction too. Either one of those, they're getting a lot of flows, a lot of volume, they're getting a lot of activity. They're going to be the options you're going to want to watch, and they're the markets that you can play no matter what's going on today with Europe or with the press releases or any of these economic events that are coming out on the calendar. Because if you think about it, Bitcoin and those China ADRs are going to sidestep most of this, right? They don't care. So there is that. So I like that approach. At the very least, it'll give you something to focus on, right? Because if the S&P is going to be range bound today, most of what you're going to want to trade in equities that you're going to want to trade in equities are going to be range bound, right? So we got to find something that isn't range bound, that's breaking out and getting a little bit of flow and some love, and that would be those two sectors or groups or directions. So that's what I got. Everybody be careful, be safe. I will see you all tomorrow.